So we've accounted for cash inflows due to sales. And now we need to turn our attention to cash disbursements or outflows for our costs. Let's start with materials. For materials, we have cash outflows or disbursements. This corresponds to the purchase of materials in each quarter. At the beginning of quarter one of the current year, Hogarth has a beginning accounts payable balance of $5,400. These pertain to purchases that were made in the previous year but have not yet been paid. When we created the direct materials budget, we looked at the material needs in each quarter and projected how much we would be purchasing in terms of materials and in costs of those materials in each quarter. We have a policy of paying 50% of what we owe in the current quarter and reserving payment for the remaining 50% until the next quarter. So given the purchases in quarter one of direct materials, 50% of that amount is paid in quarter one and 50% is paid in the subsequent quarter, quarter two. The same story applies for quarter two purchases. 50% paid in the current quarter, 50% reserved as accounts payable until the next quarter, and so on and so forth in terms of thinking about quarter three purchases as well as quarter four. Some of quarter four's purchases serve as ending accounts payable balance at the end of this current year and will be paid in the first quarter of the next year. Summing up each quarter's total disbursements for materials yields the total that we pay in each quarter. In quarter one, we have paid the beginning accounts payable as well as half of what we purchased in the current quarter. That totals $32,784. In quarter two, our disbursements are much higher for materials. Totals $55,659. And in quarter three and quarter four, there are respective amounts for disbursements for materials there as well. Now, materials are not our only cost. We also need a schedule for cash disbursements for labor costs. In this situation, it's a little bit more simple. Employees don't wait an entire quarter to receive half their wages. When employees work for us, we pay them in the quarter in which they earn that wage. So there is no beginning wages payable balance because employees were fully paid by the end of the previous year. So our quarter one labor costs amounted to $108,750, and we expect to make cash payments for that all in quarter one. The same principle applies for quarter two, three, and four's labor costs. We pay them in entirety in the quarter in which they complete the work. So this schedule is much more simple because we don't have an inventory or a payable of an amount that we owe that spills over from quarter to quarter. The cash disbursements for labor equates the cost that we expect to incur in each individual quarter. So the total payments are provided there on a quarter basis, and we can figure out what the annual cost would be as well. Now let's turn our attention to the last type of manufacturing cost, and that is overhead. Overhead, like labor, is paid in the quarter in which it is incurred. So we have the same principle that applies here. Whatever overhead costs we projected, we expect there to be a corresponding cash outflow for those costs. So quarter by quarter, whatever costs we projected, that's what our cash payment will be. And we can calculate what our total payments for overhead costs will be for each quarter, and can sum them up for the annual overhead cost cash disbursement as well. Anytime a firm has a cost that they are projecting, they'll have a cash flow associated with that cost, usually in the form of an outflow. And understanding when payments are made feeds directly into the cash budget. So of course, these schedules can be created at a very detailed level for all types of costs: overhead, different forms of materials, different forms of labor, and of course all the selling and administrative costs as well. Now that we've covered the inflows and the outflows from operations, let's turn towards creating the actual cash budget.